Thank you to Boston FinTech Week for having me here, for having this panel here. And I would argue this is one of the timeliest sessions or conversations of the week, of the month. I mean, this has sort of been, open banking has been all the rage. And I am excited not just to present you with a singular opinion, but you kind of have a really diverse group of experts here to talk about open banking and sort of the latest saga updated just yesterday. So really, really excited. My name is Phil Goldfeder. I am the CEO of the American Fintech Council. The American Fintech Council is a trade association that combines both innovative banks together with the fintech company into a single ecosystem to work together, to network together, and to really change the future of financial services. We've grown in the last 3 years from 25 members. Today, we're about 165 members and growing really, really fast and excited, more importantly, that we get to build collaborations. And I think the group that we have here, while we may have different opinions, at the end of the day, our goal is to find ways to work together to find a pathway forward, because ultimately, fintech is about creating access to financial services to families and to people who may not have access to traditional services. And so with that, I'm going to open it up to my panel to introduce themselves, tell us a little bit about themselves. They're shy, so just to give them a little encouragement, introduce themselves and where they work.
Thanks, Phil. Hi, everyone. I'm Kim Holzel. I'm a partner at the law firm Goodwin Proctor. I work in our financial services group. While Goodwin is a full-service law firm, I particularly specialize in representing banks and fintech company in building stuff, whatever that means, and then later defending that from regulators. I am a former regulator myself, now reformed, but I previously worked for the CFPB and occupied a number of roles, including as a bank examiner, general counsel's office, et cetera.
So I'm just going to correct you there. You never recovered or reformed. You're in recovery, okay? Marty?
Marty Miracle, I'm Chief Digital Officer at Thread Bank, and that Chief Digital Officer to Thread means I'm CTO as well as CISO, and it's my job to make sure we build all these embedded systems that support fintechs.
My name is Ashley Nagle Eknaian. I'm the Chief Digital Officer at Eastern Bank. Eastern's a regional bank headquartered here in Boston, and I'm in charge of the online and mobile platforms, Eastern Labs, which is our internal fintech incubator, tech risk, and project management.
Dan?
And I'm Dan Allred. I'm with HSBC. You all probably know of HSBC, $3 trillion global bank. I'm specifically with the innovation banking group, so focused on venture capital-backed companies, and I specifically cover fintech companies. So working with fintechs across operational banking, finance, capital markets, payment flow, and all of those types of things. For years, I was at Silicon Valley Bank and led the fintech group there. And in between the two banking jobs, advisory and board work with several fintech operating companies, and continuing on the board of one of those companies now.
Amazing. Thank you so, so much. And so you heard it. You have the big banks, you have small banks, you have local banks, you have a Nashville bank. But I'm going to start with our in-house counsel. Can you give us an overarching sense or sort of understanding of what is open banking, sort of how it came about specifically? And I don't need you to go all the way back to Dodd-Frank, but maybe jump forward to 1033 in terms of what took place, and sort of set the tone for the conversation.
Okay, is this on? There we go. I'm not quite prepared to give a history lesson, but in a few sentences, 1033 is what prompted the CFPB in particular to issue an open banking rule, which subsequently got scrapped, and we're eagerly anticipating the release of a new rule. So right now, the US is a bit behind in open banking, but in general, what the idea is that consumers should have more control over their data. They should be able to take the data that they have existing at their bank, and they should be able to transfer that to another provider and seamlessly be able to access additional financial services. They should also be able to authorize those service providers to do a number of other things with their data with reasonable safeguards, and that will further help our banks and fintech companies develop additional products and services in a more seamless way.
And it came about, and I remember on the stage with Director Chopra at the time, it was March of 2023, where he talked about how do we increase competition, how do we increase services for consumers, how do we offer better products. Maybe we'll start with our local bank and we'll start with Eastern in terms of the way you think about, let's just forget about open data for a second and let's forget about open banking. How do you think about data as a traditional bank? And then Marty, we're going to come to you after because I know you guys are built a bit differently, but just generally, how do you think about data and your ability to share it in the bank context?
So I think in banking, data is king, right? We use it every day. We need to keep it safe. It needs to be secure. We use it in all sorts of different ways, but what we really want to do is we want to use that data to offer more personalized services to our customers at the end of the day. We want to build a product on top of it. We want to build product that our customers use and that they like to use. And it's really important for us as a bank to, look at the ecosystem, and even if we can't build it ourselves, to partner with other providers, right, to get those products and services to our customers. So whether it's we're building, we're partnering, we're incubating, right, we're using all of that feedback and all of that data and sometimes customer insights, right, to figure out, hey, what can we do to make things better for our customers at the end of the day?
But for the last 200 years, I think banks have been trusted with protecting the integrity of the system, of protecting consumers. So how do you think about it in that context in terms of the idea of that data is king, but as the bank, you are the regulated entity?
Yeah, I mean, you have to take, safety, soundness, securely, like that is paramount to everything, right? We're the guardians of the data. We have to protect against bad players that are, looking to exploit, our systems. So, money, processes, procedures, third-party risk becomes really, really important when talking to other providers, right? When building product, we have to think about, bringing those people in, our CISO, our compliance person, our risk person, our friends in legal, right? Like, hey, are we building things in the right way? And how do we make sure that our vendors are doing things in the right way? So educating people about, hey, what are the vendors doing? How are they using our data? How do we want to enable them to do that? But how do we make sure that they're using it in the right ways, right? And how do we make sure that our customers know what's happening, right? And I think that's the end of the day. We want there to be, transparency in that. The consumer, while it's their data, we want them to be able to understand, right, what's being used.
Marty, Thread Bank is built a bit differently, right? You are a digital first, right? And so do you think about it differently, obviously in the form of compliance, but how do you think about that, again, like I said, in context of open banking?
No, not differently from a security perspective at all. My role is also CISO, so it's just as important to me. I think the difference in where Thread is and to your traditional bank is we're offering these kind of services to fintech partners who would then offer them to others. But the idea of open data is fundamental to open banking, right? I think traditional banking systems struggle to make the data available outside themselves. They also struggle to meet what fintechs and embedded banking partners need. They also, if we ever have a ruling from the CFPB, a guidance on there, it will struggle to make data available to support those consumers' rights to take their data to third parties. So that's why I believe an open banking system, an open data system is needed to support that.
Thank you. And the three of you have done an amazing job. Dan, I'm excited to get to you, but I'll give a bit of a bit more of the context in terms of new administration. Right, there was a finalized rule that came out on 1033. New administration sort of upends that. At the same time, there was legal proceedings that were going on. BPI, the biggest banks in the country, had sort of sued the administration to sort of halt the open banking rule as it was finalized. When the new administration came in, they signaled sort of the end and they were going to drop sort of the new rule. And so all was seemingly we're winning in terms of the bigger banks were winning on the legal side. JP Morgan made an announcement that they were going to charge not just announced fees, but what many in the industry said were as high as 10 times what the major aggregators were making in revenue. And so they essentially, an industry killer is what a lot of people called it, right? That JP Morgan proposed. And almost immediately, I say within a week, the CFPB reversed course on the legal proceedings. That sort of was stayed and agreed to do a new rulemaking, trying to bring the parties back together. I can tell you that we had conversations with the administration as late as last week, and they were still looking for sort of what is the pathway forward, what is the middle ground. It was just announced yesterday that Plaid, the biggest data aggregator, had brokered a deal with JP Morgan to continue those services. That is sort of the lead-in towards, I guess, the harder hitting question is, How did HSBC, sort of when JP Morgan does that, does HSBC say, great, we can also sort of charge exorbitant fees to fintech companies who want to access our data? How do you see it as arguably as, just as big, I don't want to compare, right? But as a big global bank, how do you look at data and open banking through this entire saga?
Great setup. So no, our knee-jerk reaction was not, oh yeah, this is great, we have air cover to charge as well. And we didn't. I think the interesting thing with us is our headquarters is a jurisdiction where this is mandated, right? Open banking is law. So we obviously comply. The United States is different. Our attitude in the US has been, what do we need to do for our customers? And the feedback loop from our clients has been one where they want to see open banking, or at least open banking-like data sharing. Especially in launching the innovation bank, so focused on venture capital-backed companies, while we offer dozens and dozens of products and would love to sell every single one of those to every single client, it's not reality, right? The 100% wallet share across every product is just not reality. And obviously, I work with fintech companies, so I'm a little biased on this. Of course, I want to see fintech companies win. I want to win too, by the way. There's a better digital experience and a better customer experience, and oftentimes a just-in-time, product utilization need that is met by fintech companies. So what we heard pretty loud and clear from our clients is we want to be able to share this data, because we want to be able to integrate with those products, but still be on HSBC's platform. So that's what we have pursued. Yeah.
I love that you said that. I mean, oftentimes the narrative is built or developed that it's the banks versus the fintech companies, right? And I think there is a reason why some perpetuate that. What you just said is the opposite of that. We think that, as they say, a rising tide raises all ships in the best interest of serving consumers. I find that interesting. I'd love for you to dig down a bit deeper. Is there an acceptance that, there are services that some fintech companies could simply do better? Do you embrace that? And how do you think about that in terms of your own bottom line?
Yeah, I think that, that's certainly the case. There's no doubt that's the case. And I think as the years go by, that's increasingly the case. Is that fintechs do meet some needs better, and some needs for some companies or consumers, in certain periods, especially. And to do that, they typically need access to data. Now, it's up to that company, it's up to that consumer to share that data if they want to in the United States. If they're able to do that, there are many products where a fintech is going to do better. Now, I think the benefit for a bank like ours is the overall relationship is still ours, right? And we have to compete more, right? Where I would see, charging a fintech as something like an anti-competitive, type of move. You have to embrace the competition if you're going to allow fintechs to embed, right? So you've got to be ready for that. But we offer a lot of products, and we have the overall relationship and the deposit relationship and all the same data, importantly.
I'm not going to lie, I'm a little disappointed. I was kind of hoping you'd take more of a JPM kind of tact, and then we'd have some more fun up here for our audience. But it's very refreshing to hear you say that, especially from your vantage point. So thank you.
I apologize for being so enlightened.
So Kimberly, let's talk more about, and this you sort of talked about this for a moment earlier. Is the U.S. behind, right? You talked about international, sort of what's happening in Europe, what has historically happened in Europe. Is the U.S. behind, and is there really, given what we've seen play out over the last year and a half, 18 months, can we catch up, and is there a way to find middle ground here?
We are absolutely behind on implementing regulations. I think to this day, as we've been discussing, the open banking and sharing of data as we know it in the US has been largely market-based and partnership-based and making deals about who's going to be sharing data with whom, and it hasn't been democratized through open banking. In contrast, in Europe, for example, they've had PSD2 for a while, and part of that is an open banking framework that's not too dissimilar from the original rule that the CFPB ruled out. Basically, what that did was gave the consumer the ability to authorize their banks to share their data with other fintechs or other third parties, and essentially obligated the financial institution to comply with that as long as the APIs and everything for sharing were secure. I think the US is in the process of moving in that direction. The first CFPB rule seemed to be moving with that framework, but again, I think we'll see in a few weeks where we land. So ultimately, I mean, the US is very big on innovation. I think we'll land close, but given what we've been talking about some, business objections, regulatory hurdles, it's going to take a little bit more time.
Ashley, how long has Eastern Bank been around?
Over 200 years.
Over 200 years. When you think about sort of an institution that has been successful, that has built and grown to serve consumers over 200 years, and then you think about sort of the innovation space, right? The way my grandfather banked versus the way my father banked, the way I bank, the way my daughter banks. I often tell this story. My dad writes a check for my daughter. My daughter gives it to me to cash and disperse amongst the 4 apps that she uses to manage her money. How does Eastern Bank, and I'm going to use contrast to Marty in terms of the way Thread thinks about it, but how do you think about that evolution? How has your board, your leadership, your management think about that evolution? And is it simply the focus, is the reason for the evolution sort of what you're seeing happening in innovation, or is it simply a demand from consumers?
I think it's a little bit of both. I think you have to look at competitive dynamics. I think you have to look at market dynamics, customers, your books, right? What's happening globally, and all the great technology that we have. And first off, I hate when my fintech friends and my bank friends are fighting, right? Like, it just makes me upset because I feel like everyone can win. Like you said, rising tides lifts all ships. Like, we can all find a way, to do good stuff together. I think the way, our board thinks about it and our management team is that, technology is evolving. We need to evolve with it. Customer expectations are evolving. We need to evolve with it. Any company, and I don't think that's limited to finance, right? Technology and customer behavior has changed the way we shop, right? It's changed the way, healthcare, and entertainment, right? All these industries have really changed and their business models have had to adapt. So I don't think banking is any different. And I do think banking is interesting too, because when I chuckle at your check because my mom refuses to use this online banking, and I'm like, I promise it's okay, and she's like, no, I will never use it. But I think you're also dealing with now 4 generations of consumers that bank very differently. To your point, right? Anyone from, Gen Z customers are going to bank very, very differently from boomer customers. And as banks, you can't be all things to all people. I loved what you said there, but you also have to have a personalized experience in your digital and mobile and online systems, right? Like, you need to be able to customize views and do different things and serve different products up to those different segments, because they're certainly consuming them differently.
Marty, you made it clear before, obviously from a compliance standpoint, as a regulated bank, you see the world the same way, but you are digital native, I guess we would call you, right? You're a newer bank, you were designed around the concept of innovation. How do you think about sort of the relationship with bank fintech companies, and sort of what kind of evolution have you seen in terms of the way you think about your consumer?
Well, the evolution is being able to support people with a more digital experience. I was about to jokingly say that, if you needed a more digital experience for your banking customers, you can white label our system and they would never know they moved off of it, and you could offer, your customers a true digital experience. We can talk about that afterwards if you want. So that's the real difference in what Thread is trying to do. We are a traditional bank too. We have a 2-branch community bank too, so we support your traditional banking as well. We have a true digital experience for that market as well. But In the end, I think that's what the board at Thread is all about. That's what our mission is we want to build that true embedded and digital banking system and make that available to other folks as well, other fintechs, other banks, so they can use the system as well and offer their customers a true digital experience.
So coming full back to both of you for a moment, when you think about open banking specifically, do you think that, Marty, maybe in your world, the concept of open banking and being able to share your data with those innovations maybe is more of a seamless transition to, yeah, we're able to happily sort of push out and take in data in ways that maybe traditional banks maybe struggle a bit more with. So I'll start with you, Marty, and I want to come back to you.
Yeah, and that is key to the experience, right? Is I have to be able to have that data available. And so the data systems that we developed at Thread and I've done previously were taking kind of that siloed, constrained data systems that traditional banks used and created a system to where the data we knew it was clean. We knew that you could put any tools you wanted to on top of it if you need for reporting, direct query that database. You don't need special skills to get into it. You can put AI on top of it. And we built data validations on top of that in almost real time so that we knew that our data was trustworthy. And so that enables us, because it's kind of an open system at that point, a secure system. When you say open, I don't want you to think it's free, it's just out there. No, it's secured. But it's an ecosystem where the data that we have is available either through partners, and eventually if those rulings do come down, then we should be able to offer the data to the customer as well to send to third parties because we have a trusted data system from end to end.
Ashley, I don't even want to talk to you about the bank for a moment. I want to talk about the customer.
You don't want to talk to me, Phil?
No, I don't want to. I always want to talk to you. Let's forget Eastern for a second. Let's forget your bank. Let's actually talk about the customer, right? Because your customer arguably is a bit more traditional maybe than a Thread customer. And you'll excuse me, I'm putting your customers in a box. I apologize. Does your customer understand what's happening, right? And I often talk about the debate that we see in Washington or with open banking with JPM and Plaid, and we talk about aggregators. How much does the customer actually understand in terms of what's happening and how many partners are from their app on the front end? My daughter goes into her app. Does she have any clue how many middlemen are between that app and the bank where the money is eventually? And so how do you think about it from your customer understanding?
Yeah, and you and I were talking about a little bit of this before we got up here. I think the customer, just as we are all consumers, right? How many in this room have read their Apple user agreement, right? Or any agreement, any user agreement that gives you access to something, right? I'm concerned about you back there. You've read through user agreements. And I apologize, Kimberly, for my legal friends, right? Like they're very hard to understand. They're very cumbersome. And I think people are maybe clicking through, not understanding the underlying consequences or implications of that. And I think, there's a real opportunity, I think, with open banking and whatnot to bring kind of clarity to that, to say, hey, what's in very plain language, in very plain text, like, hey, this is who has access to, this is who you have granted access to your data, and this is what they're doing with it. They're giving you lending decisions, they're sharing it, right? And being able to opt out, just like you have a toggle to say, oh, I don't want to do this on my phone anymore. Wouldn't it be great if people just at that basic level, like understood, like, oh, I understand that these 5 providers have access. Oh, I don't want to use this subscription anymore. I'm going to toggle that off, right? So I don't think we've made it easy, right? And I think the industry has a lot of work to do with fintechs and everyone, right? We should be making it really, really easy for consumers to understand, who has access, what they're doing, being able to revoke it. Because I do think with all the different connections, some customers, especially in the older demographic, might have clicked on something for one thing and then it's being continually used. And then you think about fraud, you think about credential sharing, things like that, and you really, really get concerned about those customers that might not understand the implications of something like that.
I love that you went there, and the perfect opportunity to come back to you, Kimberly. We often say at the American Fintech Council that clarity is key. Tell us what the rules are, tell us what the processes are. Regulators then know how to regulate, industry knows how to operate, and consumers understand the totality of it. Before open banking, right, you saw things like screen scraping and other methods of collecting consumer data. If we actually are doing this the right way, you're creating clean, safe mechanisms for data to flow between banks and fintech companies in a safe, reliable way. How important do you think that is? What are some of the benefits and maybe some of the challenges of fraud and identity risk before we got to this place?
So earlier you said that Dan's answer about fintech versus bank was too friendly, so I'm going to stir the pot. So you hit upon everything being clean and safe, and I think in terms of clarity around the rules, there is a lot to be desired around what is considered safe. And one of the little talked about aspects of the open banking rules is that it kind of places the onus on the bank to determine whether an API is safe enough to transmit data. And that sets up a bit of a fight between the bank and the fintech that wants the data. We expect, or the rule rather punted the idea of creating those standards, but it wasn't developed yet, and I'm hopeful that they will be. But until then, it really creates a big vacuum for people to argue over what safe and secure means. And then if it's not safe and secure, it allows bad actors to go in and get access to consumer data and use it for nefarious purposes. And Ashley was talking about, making things clear for the consumer. We fully expect that some of these authorizations for the consumer are going to be buried in places where they don't read it or they don't understand it. And that may create a free-for-all. And ultimately, what that's going to mean is that consumers are going to have their data out there, potentially usable by bad actors to basically hack their accounts and drain their accounts potentially. And at the end of the day, the responsibility for that rests with the bank under the Electronic Fund Transfer Act and other fraud rules that really make the bank liable for those types of things. So now we need some more rules to better understand what the standards are to make this a safe and secure model.
All right, I'm going to push back a little bit. I hope you don't mind, but you asked for it. Oftentimes, people think about fintech as kind of the Wild West, right? Like, oh, banks are safe, and inherently, if banks are safe, fintechs must be less safe. There's an argument to be made, I would say, especially over the last 4, 5, 6 years, but even going back further, that fintechs recognize that. I mean, I see today, and we have a membership of, like I said, over 160 companies. A lot of fintech companies have chief compliance officers now, right? Whereas maybe 5 or 6 years ago, they didn't, and they didn't understand. Whether it was because of the onslaught of consent orders, sort of the regulatory sort of oversight, do you still think that there is and again, I hate, there's bad actors, bad actors are gonna be bad actors, right? And I'm not a person to determine who's bad, who's good, but like fraudsters are gonna find new ways to fraud. I would argue they're always one step ahead of us. Can we make the argument though that I think everybody has the same interest in protecting the consumer's right, the fintech company, if they want the bank to trust them, right? And that's why they brought on those compliance officers. So do you think the narrative of, well, the bank is on the line and so they could do what they want? Now what JP Morgan said, well, we can do what we want to protect our system. We have to charge 10 times what it actually costs. Is that just JP Morgan trying to protect their own incumbency versus trying to be a part of that evolution?
I think that's the age-old question. I don't think that fintechs are inherently unsafe or lack a sense of responsibility. But when you talk about the traditional fintech bank partnership, it is the bank that's putting up its charter to open up a deposit account or to transmit money. And the fintech companies, I think, are quite sophisticated these days about protecting consumer data and implementing consumer-friendly policies. However, as a startup they may have some, restrictions on funding or time to really build that up to JP Morgan level compliance and cybersecurity. And so there is still an opportunity out there, particularly in the early stages, for bad actors to at least try to penetrate, regardless of how, noble the intentions are. And I absolutely think that the majority of the partnerships that I work on, both parties really have the consumer at heart and have the best intentions and really are doing a good job at compliance and building out their cybersecurity and organization. However, legally, at the end of the day, the bank is the one holding the bag on fraud losses. And we do try to do a lot to share those losses between the two aligned parties, but the regulator will go directly to the bank first.
Just a practical example of what she's saying is I worked at banks that are fintech supporting banks, payment banks, and the examiners expect us to hold the fintech responsible, right? So they use the bank actually, because we are the bank charter, right? We are their access to the banking system. So that the responsibility is mainly on the banks to push them to do what they need to do. We've fought that battle a few times and I've lost it twice, so I've just accepted that's reality.
I think we all agree that any bank and or fintech company that is using Goodwin is going to be in a better position than any other law firm, right? Excellent. As long as we all agree on that. Dan, you were too nice at the beginning, and so I've kind of left you off on the end over there, right? And so we're going to try and get you a little spicy. All right. Let's talk about aggregators, right? And so if you go back, if you rewind the clock 10, 12, 15 years, the reason that companies like Plaid exist or that MX exists or Finicity exist was because the data was just that. It was raw data, and no one can actually integrate or understand or utilize it. And these companies came along and made it usable, right? And so they actually, to their credit, provided a service. They argue, again, how you think about how they charge and what they were charging for, were they charging for data, and so on and so forth. And I don't want to go down that. Do you see HSBC sort of, how do you see your bank, sort of the continuing relationship with the aggregator versus with the customer directly? This was an argument I used a lot over the last month was, look, if JP Morgan didn't want to share the data and was concerned, then they should create their own system, right? They should build the Plaid, which they did not do. I oftentimes use this, again, you think about why someone chooses Robinhood versus Chase's brokerage account. Because Robinhood built a better product, right? And so people go to Robinhood. Could Chase do it? They could. They choose not to because that's not where they want to make their money. Same thing when it comes to aggregation. How do you think about what HSBC's responsibility is?
Yeah, so I think about the arc of that story over time, right? So you've got these aggregators who have proven the market, the utility of this, and probably done so in a way that the banks never would have chosen themselves. But it's a reality that we live in, right? That credit card is now with Brex or Ramp, it's not with me, right? And that's because, it's not the only reason, but a key driver in that is the access to the data for those companies to be able to underwrite and manage effectively, right? So never would have chosen that in a vacuum, but now that's the reality that we live in. So you get to, well, what happens next, and how do you, your bank's 200 years old, mine's 160 years old. We're doing different things than we did 160 to 200 years ago. And that innovation needs to happen, but for, entities like ours that are large and regulated and mostly differentiated by being safe and sound, innovation is not the front foot, right? So you kind of got to get pulled into it or pushed into it. And I think that that's what happens. So I do think that over time, you are going to see banks, basically compete more directly with those aggregators. But we never would have done that. We never would have known to do that had we not gotten pulled right into it by the use cases becoming reality because of them.
So, and again, you'd please, and I said I don't want to put you on the spot, and I promised I wouldn't put you on the spot, but just literally yesterday or the day before yesterday, Plaid reached an agreement with JP Morgan to continue their services uninterrupted. Do you think that's a good thing? Do you think that is obviously the idea of a total breakup and explosion would have been, I think we all agree, would have been bad in many ways for the consumers. Do you think that this is a positive sign over the last few days or sort of more of a challenge?
No, I think it's a good thing. I think it's a good thing because I think that the fact of the matter is this is the way the world is moving, right? Whether it's mandated by regulation or not, data is going to be more open than it was. Right, and that just seems very clear. And look, I would have loved it if JP Morgan wanted to continue to fight with Plaid. I think it might have been on a net basis good for me.
It's very, very true. You would have seen people leaving.
But for the industry, I think it makes sense. I think it's a good move.
It begs the question. I'm fascinated. I wonder, to what you just said, would more people think about digital first banks or traditional banks if it continued to be a fight and Plaid was cut off to JPM's sort of data?
Yeah, I think that what they would think about is what is the use case and the functionality they're after, and where are they going to get that, right? So I don't know that your average consumer, and probably not even your average business, is thinking about digital versus traditional first. I think what they're thinking about is what are my needs. and how are my needs getting met? And I think every bank, regardless of size, regardless of strategy, has to be listening to its customer, right? And planning and executing accordingly. So I think it would come down to those use cases for each customer, right? Marty's clients can't come to me, right? I mean, I'm not going to be their access, to the central banking system, right? That's not going to work. There's a lot of other stuff I can do for them, but we're all bringing something different to the table, and I think that's what every bank has to be thinking about is like, what am I bringing to the table, and do my clients want that?
So I was at another conference last week, not as important as this one, so I'm all happy you're here today. But I was on the panel with JP Morgan, and they were highlighting the fact they had just recently opened up a brand new branch on a college campus. And I kid you not, I laughed out loud. I said, because again, I think about my daughter and I think about the customer of the future, is my daughter will never ever see the inside of a branch. She has apps. She has literally 4 apps that she uses. She has a Robinhood, she has an Acorns account, she has at a neobank, and so she has apps, but she will never ever step into a branch. The idea that we're trying to force consumers into our way of banking is something that I think is going to become more and more foreign, and I'm curious to see how JPM continues to. They could innovate, they choose to or not to, and so again, refreshing to hear the way you think about the world. I'm going to go back to the entire panel, and maybe Marty, sort of I think again, digital first is another way of saying maybe customer first, right? Because that is where customers want it. So whose responsibility is the customer, right? As we heard Kimberly talk about the bank is responsible, I think everybody concurred the bank is responsible, they are the regulated entity. So who's responsible, going back to what Ashley talked about? Well, the consumer's not going to read it, or the consumer's not going to understand it. So how do you know when they're permissioning their data, when they're not permissioning their data? Interestingly enough, again, I've been beating up on JP Morgan a little bit too much today. They talked about 1.9 billion API pulls in a single month. It's not just every time a consumer pushes the button. As you know, the fintechs are working in the background. They're pulling data 5, 6, 10 times a day to make sure that their accounts are updated. So, Marty, we're going to start with you. Whose responsibility is it?
Well,
not regulation, but to inform the consumer.
Yeah. Well, of course, we're responsible for informing the customer, but I think a lot of the reason why that CFP ruling was withdrawn is because these things weren't well defined. So you didn't know who was responsible for what, and so we couldn't deliver what they wanted to. So that's why there was this pushback. So any new ruling should have that more well defined, who exactly is responsible for what are requirements for informing, how you manage all of that has to be more well defined. And that's, until they do that, then we're going to continue to get that kind of pushback. Eventually, the banks will do what they're asked to do, as long as it's well defined. Because we don't want to get into go to an exam, right, and have a loose rule, and then it's up for interpretation, right, for if you're going to meet the finding or not. So please do a good job of well defining that before you.
Ashley, what do you think?
I'm looking at you like it's your rule, but.
It's a large problem, and I don't know if I have a good answer. I think the other huge part, at least in the United States, and a little bit of a plug for lack of financial literacy, right? Not even just you don't know what data is using, do you actually understand these financial products? Do you actually understanding what you're signing up for? And that, I think, has to start at a really young age, and we don't have a great financial literacy at schools. I'm on the board of Fit Money, look us up. But it's a nonprofit, and I think that's really important. I think there's also, somewhat of a cultural sort of shift happening, and you just see this with social media too, where people are starting to understand that they're the product, right? So not talking about financial services, but just as a culture, wow, I am the product, right? I am being influenced by these things, and I'm really interested to see how that sort of funnels into other industries.
I'm always fascinated, and Kimberly, I'm going to come back to you for a moment. I'm always fascinated with when you see an app. I always scroll to the bottom. I want to see the fine print because I want to see who the bank is on the back end of this app. Obviously, the fine print, part of open banking was trying to really put it all out into the open and clarify who's responsible for what and how you're thinking about permissioning and all those things. Do you think, sort of we talk about the bank is responsible, and yet they're tiny, tiny print all the way at the bottom of the page. And so how do you think about the education for the consumer?
I'm a little concerned that that's the first thing you look at in the app, but I'm glad you do. It just makes you unlike the rest of us, I think. when we advise as a lawyer on what disclosures and disclaimers and permissions need to be included on our tiny phone screen, ideally we would love to see big flashing lights and bold font, but that would get us fired. It would not be very business friendly. It would not consider the experience of the customer. And I think at the end of the day, we need to strike a balance between disclosing what the consumers need to know when they are authorizing the release of data versus, baking that into the consumer experience overall. And I think there is actually a long line of law that talks about the enforceability of click wrap agreements when that's, in the fine print and you don't really affirmatively agree to it. So I think we'll see, people drawing on that history to determine what the right balance is.
Yeah, I'll try to be very quick with this. Obviously, everyone needs to disclose what data they're accessing and what they're doing with that data. However, the party that's going to benefit from this the most is the client who owns the data. The client needs to be responsible for understanding what's happening with their data. Not that I guess they can self-educate, but they need to take it on themselves to be educated in any way possible to understand how they're getting at that value.
Huge round of applause for our panelists. Thank you so much, everybody. Thank you for being a great audience and laughing when I needed it.